coming up, our next guest is Ben Gagnon, Chief Mining Officer for Bitfarms. Hello, Ben. How you doing?
I'm doing well. How are you?
Good. Thanks so much for joining us today. We've got a lot of content to go through. I'm just going to go ahead and jump off and allow you to do your presentation.
Okay. Thank you very much.
Thank you.
Okay. So welcome everybody to this Bitfarms corporate presentation. Just going to quickly cycle through these cautionary statements here before we get going. Okay. So what is Bitfarms? Well, Bitfarms is the latest evolution of the Bitcoin mining industry. Bitfarms is a pure play, publicly traded Bitcoin mining company that enables nearly anyone in the world to buy direct exposure to industrial scale Bitcoin mining companies and facilities. One of the fastest growing industries in the world is Bitcoin mining, and to invest with a trusted counterparty like Bitfarms is a pretty new and novel concept. Now, why is this important? Well, the adoption of Bitcoin continues to accelerate, and as the premier hedge against rampant money printing and inflation globally, Bitcoin serves as a very powerful tool to do that. But historically, in high inflation environments, having your revenue be based in the underlying inflationary asset puts you at an extreme risk of being unable to keep pace and preserve your purchasing power, especially over time. There is only one industry in the world right now whose revenues are 100% derived in Bitcoin and will always be, and that's Bitcoin mining. And Bitcoin mining is the freest market in the world, or perhaps the freest market in the world. And as such, really only the best operators can survive and thrive in the long term. But setting up and operating a Bitcoin mine is not as easy as it used to be. When Bitcoin started, it was essentially looking like this, just one guy and a computer in a basement. But as time passed, people sought to get a competitive advantage with more computational power and newer technologies. It did not take long before custom-built machines were designed and custom facilities were built just for the purpose of Bitcoin mining. But the desire to gain competitive advantage meant that people often did this fast and cheap just to make it work. But all these inefficiencies that you can see here on the screen, the poor placement, the overcrowding of racks, the broken equipment down in the center of the row, the broken fans in the background, all of these inefficiencies mean less profit and less Bitcoin for the operator. As Bitcoin becomes an institutional asset class, it's going to require institutional operators like Bitfarms to provide the security and stability that any trillion-dollar asset class would have. So, meet Bitfarms. From our earliest days, our goal was always to try and do Bitcoin mining right. Doesn't matter if it's our financial structure and our publicly traded shares or our early focus on the environment, where we've powered about 1% of the Bitcoin network with green hydropower for several years. We do this across 5 advanced data center facilities in Québec, Canada, where we achieve tremendous economies of scale as we go and produce new Bitcoins every single day for significantly below market value and put those Bitcoins into treasury for long-term price appreciation. What you're seeing here are facilities that have 5 years worth of engineering, innovation, and operational experience rolled into them. And they're all maintained by our proprietary management software, our 24/7 command center, and our staff to make sure that we have the most uptime, the most Bitcoins mined, and the most Bitcoin revenue possible. We have our own 100% owned electrical engineering subsidiary that designs and maintains all of these data centers in Quebec, Canada, and also helps us to evaluate further opportunities abroad, both in North America, South America, and elsewhere. And then we take these huge economies of scale to a new level as we expand out to 178 megawatts of renewable hydropower in the province of Quebec. And we wrap all of this into our publicly traded shares. And this is really where it becomes a very important thing, because when we're looking at investing in Bitcoin mining or Bitcoin, you have to ask yourself, why would you invest in a Bitcoin mining company when you can just invest in the Bitcoin? Well, and the answer comes from those 3 things: because our revenues are derived in Bitcoin, because we hold Bitcoin, and because we can quickly grow our shares because we can quickly grow our share of the Bitcoin mining network. As such, our shares do function as a lever to Bitcoin itself. So if you believe that Bitcoin's going to go up, you should also believe that we're going to go up more, because our revenues are derived in that appreciating asset, because we're holding inventory in that appreciating asset, and because we can forecast that as Bitcoin price grows and as we continue to grow our share of the network hash rate, we will continue to get more and more of this. Now, there's, of course, reasons why this profit opportunity exists. One, there's a need to incentivize companies like us to come in here and provide the stability and service of the network. And two, there's also operational challenges with operating facilities at scale. And it's why it's so important to choose a good operator to invest in if that's what you're looking to do and get exposure to, which is something that we focus on from the beginning at Bitfarms. Ever since our founding back in 2017, we have tried to do things right. We've built facilities properly, clean, high efficiency with good scale. We invested in our electrical engineering subsidiary very early on so that we didn't make these, costly mistakes at the beginning. We've been able to expand on our facilities, building larger and larger facilities over time and more numerous facilities over time. And we also have been publicly traded since 2018 on the Toronto Stock Exchange and been audited by a Big Four firm for the last 4 years. So we are trying to reduce those counterparty operational risks, because it is not plug and play anymore to just turn on a Bitcoin mine and expect it to generate revenue. This is something that we need to install and also maintain over time in order to get the most amount of Bitcoins and the most value out of all this equipment. We're also going to be scaling this much further past where we've already done it in Quebec. We've already announced our expansion into South America, our first announcement of an international expansion where we're going to be taking over the entirety of a power plant for 210 megawatt nameplate capacity and publicly disclosed just north of 2-cent cost of electricity. This is about 50% of our cost of electricity in Quebec, which will enable us to produce Bitcoin with the same equipment for roughly half the operating costs as we do so in Quebec. This will enable us to achieve much greater throughputs in terms of our scale, and also to extend the lifespan out of our Bitcoin mining equipment that we have in Quebec by cycling it out to this lower cost jurisdiction. We also have, as I talked about earlier, our Volta Electric, our 100% electrical engineering subsidiary, which is one cornerstone of our vertical integration. The electrical engineering represents such a significant component of our operations and our designs that it really does make a lot of sense to bring all this talent in-house so that we're not paying exorbitant consulting fees. And then we also have the speed and efficiency of responding to things quickly. We also have our own in-house repair lab, which helps us to maintain all of our equipment and keep it running in pristine condition and generating the most Bitcoin mining revenues possible. All of these operations are tied into our incredible exponential growth that we have planned and scheduled. You can see here we ended last year at just shy of 1 exahash. We quickly broke the 1 exahash barrier in 2021. We're going to surpass the 2 exahash barrier here shortly in the coming months, and quickly reaching levels of 3 and 8 exahash sometime next year. We're able to do this because we have a huge amount of infrastructure that we're building, both right now in Quebec as well as Argentina, and we're also further evaluating opportunities in North America as well as Europe and elsewhere. We have over 56,000 new generation Bitcoin mining units coming that are scheduled for delivery between the next few weeks, as well as through the remainder of 2022. And each one of these Bitcoin miners are capable of doing about 100 terahash on average, which means that this is, it's nearly 5.6 exahash worth of equipment that's scheduled to be coming. That's a multiple of where we are now, and it's already contractually secured. One of the other great advantages that we have here too is because of the recent pullback in mining economics with the China ban, we were able to take advantage of that lower time and negotiate lower cost prices on our existing contracts for new Bitcoin mining units, still scheduled for delivery. And because of our recent uplisting to the NASDAQ, we're also now able to have lower costs of capital as we seek to achieve these greater levels of scale and finance all of our growth. This business is an incredibly capitally intensive business. And so having those cheaper access to capital is incredibly important to funding our growth and achieving the best return on our investment. As of right now, we have 69 megawatts installed. We are quickly building that out, and we'll have around a little over 100 shortly by the end of the year or at the beginning of next year. And that's going to quickly scale up to nearly 400 megawatts by the end of 2022 in order to take advantage of and monetize the full amount of those 56,000 miners that are still coming. As we introduce these new mining machines into our fleet, two things are happening. One, our hash rate is increasing, which means that we're able to produce more Bitcoins than we would otherwise. And two, our watt per terahash or our electrical efficiency is improving, which means that our cost to produce those Bitcoins is also falling. So we're producing more Bitcoins and we're able to produce them at lower costs, given the newer, much more energy efficient equipment that we're installing. In terms of production, we are one of the largest producers of Bitcoin by far amongst the publicly traded companies. We were the largest producer in 2020, and through Q1 and Q2 of this year, we are also the largest producer in North America in terms of total Bitcoins produced. Right now, we have, according to this sheet, approximately 1,840 Bitcoins in custody, valued at about 85 million as of a couple of weeks ago. And we will be putting out our August production figures here in the next couple of days, and we'll have an update to our new custody figure and the value of that shortly. In terms of a valuation comparison, there's a number of publicly traded companies that are in the Bitcoin mining space, but Bitfarms has one of the lowest valuations relative to its performance and relative to its computational power. You can see here Bitfarms compared to other producers of Bitcoin and where they stand in terms of a dollar per hash rate metric. And we are here at the low end, meaning that we have significant upside potential as we catch up to our peers on the valuation side. This is also true for enterprise value per terahash, which gets rid of some of the nuances in the accounting and provides more of a clear picture. In terms of our financial performance as a company, we've had an incredible last 2 quarters with significant growth driven by a couple of factors. One, introduction and installation of new mining equipment throughout Q1 and Q2, as well as increased Bitcoin price throughout all of Q1. And then the Bitcoin mining ban in the end of or the middle of Q2, which helped us to grow our gross mining margin and our revenues even further. So we've got great numbers for Q1, Q2, outpacing most quarters and most years before that by all metrics. And then we have incredible EBITDA numbers, and we should expect to see similar or better numbers for Q3 as well. In terms of our coin mining and our gross mining margin, this gets into the, how we're producing our coins for significantly lower market value. This is where we end up on the chart here. You can see that we're essentially at about an 80% gross mining margin, meaning that only 20% of the value of that Bitcoin needs to be sold in order to cover all of the operating expenses to produce that Bitcoin. So we're a very high margin business. And because of that, we are actually fairly de-risked. In order for Bitcoin price to really impact us as a company, we have to see significant pullbacks, much greater than 70, 80% before it really does start affecting us as a company. And if we do see pullbacks, temporary pullbacks in price, what that means is that we're just simply earning more Bitcoins, even if they're worth less. So we do have a competitive advantage, and we are hedged on the downside through our low cost operations. In terms of our financial position and capital structure, we have a small amount of insiders, around 15%. The majority are retail and institutional investors. And in terms of our cash and equities, our cash was just shy of $100 million. Current assets about $85 million, and the equity valuations were around $200 million. So huge amount of assets on the table here, huge amounts of distribution of our shares across a huge amount of investors who see the opportunity both in Bitcoin mining and more specifically in Bitfarms itself. And then finally, Bitfarms is managed by an incredible team of executives that help to deliver and oversee this growth. We have our founders from Argentina, Emmy and Nico, who are overseeing the 210 megawatt power plant project in Argentina. We have our president, Jeff Morphy, who's in charge of almost all of the executive and corporate tasks for the company. Jeff Lucas, who is our new CFO from the US, who has worked with a number of NASDAQ traded publicly listed companies, tech companies, and had tremendous performance and returns on those companies. Myself, I've been operating Bitcoin for 6 years. Benoit, who is a qualified master electrician and who runs our electrical engineering division and our operations. Nathaniel Port and Darcy Donnell, who do a lot of the accounting and the back-end work in order to make sure that we tick all the boxes for compliance, and all of our investors to make sure all of that's in line and providing the most transparency and the least amount of counterparty risk. We also have an independent board with 3 independent board members made of Pierre, Brian, and Andreas. So in summary, Bitcoin is a huge, huge growth industry, and Bitcoin mining in particular is going to outpace that. As Bitfarms is one of the oldest and largest Bitcoin mining operations in North America, with over 69 megawatts built out right now, and incredible pipeline for future developments past 100 megawatts and up to nearly 400 megawatts over the next 18 months. We have tremendous room to grow and scale beyond our current size and beyond our current share of the market. We've already deployed approximately 23,000 miners, and we still have 56,000 miners to come in several new locations to finish constructing. All of our facilities are passively cooled, which means that we have incredibly high energy efficiency ratings, and they're always maintained by our 24/7, 365 command center, our in-house repair labs, our proprietary management software, and our skilled technicians who help to ensure that we're getting the most uptime and generating the most Bitcoins for the least amount of money and the least amount of overhead. And we've been working on addressing these institutional check marks. We were the first company to go through the front door with the Ontario Securities Exchange Commission with a long-form prospectus. We're the only publicly traded Bitcoin mining that's audited by a Big Four. And we're listed on both the TSX and the NASDAQ, which means that we comply with 2 different reporting regimes. And finally, it's that strong management team with experience in all sorts of aspects of the business, whether they're data center or different jurisdictions, technology, finance, business growth, compliance, electrical engineering, development, code. All of these different areas are well represented within the company. And that brings the presentation to a close. This is Bitfarms, and thank you for listening to our presentation.
Ben, just one quick question before I let you go. I know you'll be back later on, but what do you think is the most important metric from an investor's point of view in looking at a crypto mining company?
There's a couple of different things that we would look at, and the Bitcoin mining companies are not all too, different. There are unique advantages, and unique competencies amongst the different providers. But what I would look for is, what's your cost to produce a Bitcoin? That's my primary one. How many Bitcoin are you holding on your balance sheet? And what does your pipeline for growth look like over the coming 6, 12, 18, 24 months leading up to the next halving? Are you going to be ready as a company to bear the halving that's coming in several years? I think those would be my primary things I'm looking for in terms of check marks. If you're looking just for a pure metric, I think the simplest one to understand is either enterprise value per terahash or market cap per terahash. And that's really trying to understand how is the company valued relative to its ability to produce Bitcoin. And you would think that the more Bitcoin that you produce, or if two companies are producing the same amount of Bitcoin, they should be valued very similarly, unless you take into consideration the other factors like how much Bitcoin they're holding on their balance sheet or what's the underlying cost to produce that revenue.
All right, Ben, we'll be hearing more from you in a little bit, I think. But Ben Gagnon is the Chief Mining Officer of Bitfarms. Ticker on the screen, URL on the screen. Ben, thanks a lot, man.
Thank you.